Hello folks, welcome you all to a new lecture. This is CA Ganesh Bharadwaj. In this video, we will be looking at an overview of our cost accounting syllabus, and then we will be proceeding to the next chapter, the first chapter called Basic Concepts. So let's get started. Now, in the previous video itself, I gave you an overview of what our syllabus is. I told you that in our institute, CMA Institute study note, they have all the chapters by way of, they've classified the chapters by way of sections, then your modules and sub-modules. But we have encompassed all that. I've taken account everything and I've put it as 18 chapters. So this is how it looks like in our handbook. This is how it looks like, 18 chapters. But before we get into the first chapter, I just wanted to give you a more insight on these 18 chapters, how these 18 chapters should look like. And basically, I wanted to give you guys a different perspective on these same 18 chapters. Now, I call this as syllabus redefined. So I'm just giving you a different perspective to the same 18 chapters that we are going to do, a different perspective. And why are we doing this? For a simple reason, it will enhance your understanding of the subject. So now let's get started. Now, broadly, the entire syllabus can be classified into three ways. One is called as elements of cost and cost bookkeeping, then methods of costing, and then techniques of costing. Now, before I get into this, I will just tell you one very important thing that generally is going to get followed during our lectures. Now, whatever I have written down here by way of running notes, this will be made available to you all by way of a PDF. So you need not worry, you need not write down parallelly. So you just patiently listen to the lecture, understand whatever I'm trying to say, and then practice it in your home. I mean, generally during the course of our lectures, I'm telling you this is a standing instruction. So always, whatever I'm annotating here, whatever I'm writing here on my note, on my notepad, will be given to you by way of a PDF that need not be written parallelly by you. So you need not take those efforts, that already gets taken care of by us. Okay, clear? Now let's get into this. Let's get into the syllabus. So I call this a syllabus redefined because I want to give you a different perspective to the same set of 18 chapters that we are going to look at. Now, this 18 chapters can be classified into three buckets. Yes, the first bucket or the first classification, I call it as elements of cost and cost bookkeeping. The second one, I call it as methods of costing. And the third one is called as techniques of costing. Patiently listen, no need to write down anything. All these things will be provided to you. Okay, so under the first category called as elements of cost, the following are the chapters that will be present: material cost, employee cost, direct expenses, overheads, cost sheet, cost bookkeeping, cost accounting. Now, basically, I have also given you the chapter reference. If you look at this, this is your chapter reference. The chapter reference as per our handbook. Whatever I'm saying right now, I'm giving you the chapter reference as per our handbook, so you can compare it directly. Now, first you should understand what is elements of cost bookkeeping. So why are you giving this categorization and putting some 7 chapters here? Now, I will tell you this. Now, basically, elements of costs. What does it mean? What are the different types of costs that you can have? Or in other words, let me give you one example. Let us say a person is a pen manufacturer. Now, for him to manufacture a pen, you know that pen, from a viewpoint of the manufacturer, this pen is going to be a final product, or in other words, in costing words, we call it as finished goods. So a pen is a finished good, correct? For him to manufacture this pen, there are certain raw materials that he will need. Raw materials like, let's say, plastic. Yes, he needs plastic to manufacture this pen, correct? So that plastic, that raw material, gets covered under this chapter called as material cost. Now, this plastic by itself will not convert into a finished product, correct? So he needs to put some efforts. He needs to employ some people. He needs to employ some labor and make the raw material, convert it into an FG. So that is called as employee cost or labor cost, that gets covered in a separate chapter. Apart from this, apart from material, apart from labor is also called as employee cost. Apart from that, they might be incurring some direct expense. yes, some other direct expenses, and they might also have some indirect expenses. What is direct, what is indirect, I will be walking you through during the course of the lectures. For now, you can patiently listen this. Now, indirect expense is famously called as overheads. So that also he will be incurring, correct? Not all expenses are direct. Some expense might be indirect. So all these are basically multiple elements of cost. So these gets tracked here in the first category of our subject. Now broadly, these are the four categories or the four elements of cost that a manufacturer incurs. Now, after this, whatever he has incurred, if you present it in a statement format, for example, material cost so much, labor cost or employee cost so much, direct expense so much, your overhead so much, the same can be presented in a statement format. Now, example, let's say you have a two-wheeler and you go to your service station and ask him for an estimate. You ask him, sir, I want to give my bike for service. How much will it cost? Now, what he will do, he will prepare an estimate. He will say, sir, for you, this air filter has gone. So for air filter, we are using one material. So this is the cost. Then our labor, we will put labor charges. Then other expenses we will put, and he will give you one summary, final price, 1,200 you need to pay. This statement where I collect all the elements of cost and present it in a statement format is called as cost sheet, that is getting covered in a separate chapter. Clear? Now the same elements of cost, if you present it in a statement format, it is called as cost sheet. If you present it using a double entry bookkeeping system, that is using debit and credit, it is called as cost bookkeeping. It is called as cost bookkeeping. What is what we will study thoroughly in each of these chapters. It is not like in one day we can understand everything. This is a separate chapter. These are all, each of these components are separate chapter by itself, which we will be seeing in depth and in detail. Don't worry about that. Okay. Now, all these things, I told you, you have multiple elements of cost. You can present it in a statement format called as cost sheet. If you give an accounting debit and credit, that is double entry bookkeeping element, if you give to it, that is called as cost bookkeeping and all that. All these things needs to be followed as per a document that is prescribed by our CMA Institute. All these things, can I say randomly I can prepare any kind of statement, or randomly I can account it anywhere, anything I can debit, anything I can credit, or material cost I can deal it in any which ways, labor cost I can deal it in any which ways? No. There is a document that is prescribed by our CMA Institute, Cost and Management Accounting Institute. The document is called as Cost Accounting Standards. So cost accounting standards, to put it in simple words, is the guiding document that provides all kind of information regarding the manner of dealing in elements of cost, the presentation and all of that. That is a separate chapter for discussion, which we'll be seeing later in the course of our lectures. Clear with this? So basically your entire cost accounting principles stems out from the first leg of our discussion, elements of cost and cost bookkeeping. Are you all clear with this? Wherein elements of cost, presenting it in a statement or presenting it in double entry bookkeeping system. And finally, we saw that all these things are governed by a document called as cost accounting standards. This I am classifying separately under one particular area called as elements of cost and cost bookkeeping. Sir, so that's all? No, sir. So you have told this is the basic cost accounting principles. That's all? No, sir. Yes, broadly that's what it is. But you know, certain companies operate in certain different industries, or to put it in other words, there are many industries that are available in market. For example, there are industries where it requires multiple process for a raw material to get converted into finished goods. A typical example would be cement. Cement, for cement to be converted from raw material to FG, for this final product called cement to come, it has to pass through multiple process. So now in this industry, there are certain unique aspects that also needs to be taken care of. Now there can be another sector where, you know, let's take an example. It is called as contract costing. In that, what happens is it generally takes more than 1 year for the raw material to get converted into FG. Now in this particular sector, there are certain unique aspects that needs to be taken care of. Let's say there is another sector called famous service sector. In this sector, there are certain other unique factors. For example, in a service sector, you don't have a concept of raw material FG only. There is no stock alone. there are certain other aspects of costing that needs to be applied. Or to put it in other words, the cost accounting principles are broadly covered in classification 1, that is elements of cost and cost bookkeeping. But there are multiple sectors that are available in the market, and there are certain unique features that are applicable exclusively for each and every sector, and this gets covered under the second category called as methods of costing. Or to put it in more simpler words, sector wise cost accounting is called as methods of costing. In this you will see something called as job costing, batch costing, process costing, joint and byproducts, contract costing, and operating costing. Operating costing is nothing but service costing. So basically applying whatever concepts that we learned in the first category and customizing it to each and every sector is what is covered under methods of costing. So sector wise cost accounting, certain unique aspects can develop in each of these sector, and sector wise cost accounting is what gets covered under methods of costing. Are you clear with this? Yes. And then what is third part? Techniques of costing. Now, techniques of costing is not sector specific. Please understand, it is not sector specific. Now, in this techniques of costing, basically we have 3 chapters: marginal costing, standard costing, and budgeting. Okay, marginal costing, standard costing, and budgeting. Now, what do you mean by techniques of costing? Whatever information cost accounting provides me, I can apply it for some decision making. So, for example, let us say this budgeting. Let us say budgeting. Now, let's say you have 6 months from now for your exam. 6 months from now for your exam. So, what you will do? You will just allocate your time. Let's say you have 6 months. So, 6 months into 30 days, that gives you 180 days, and each and every day, let's say you spend some 10 hours a day. So, that is 1800 hours. Correct? 180 days into 10 hours, 1800 hours. So the time available for your academics is 1800 hours, based on which you will arrive at some decision. Okay, for subject 1 I will spend so many hours, for subject 2 I will spend so many hours, and so on. Correct or not? So this kind of decision making you will make using whatever costing gives you, that is whatever the costing principles gives you. If you start making some meaningful decision using that, that is getting covered under techniques of costing. Clear with this? Yes. Now don't think that this is sector specific. Please don't think that this is sector specific. Now this budgeting concept, I can use it for a process sector, I can use it for a contract sector, I can use it for a service sector, or I can use it for any other sectors also. So techniques of costing are not industry specific. They can be applied across all sectors. These are basically, what do you mean by techniques of costing? It is simple. Whatever costing principles gives you, the data that the costing principle gives you, using that, if you take some meaningful decision, that gets covered under techniques of costing. Now this budgeting example, whether you are preparing a CMA course, or you are preparing a CA course, or you are preparing a CS course, the concept of budget can be applied across, right? Similarly, that's what I'm saying. This is not industry specific. Budgeting I can apply for job costing sector, I can apply for batch costing sector, I can apply for process costing sector, I can apply for any other sectors also. The same goes with marginal and standard costing as well. What are these chapters in detail? We will be seeing at the end of our, during the course of our lectures, we will be seeing it. For the time being, you just understand that the first component is elements of cost and cost bookkeeping. It tells you the basics of cost accounting, your costing principles, and if you apply that industry wise or sector wise, that is called as methods of costing. And techniques of costing is nothing but the information that costing provides you. Based on that, if you start making some decisions, if you start taking some meaningful decisions, that is covered under techniques of costing. Are you clear with this? Yes. Now if you notice, we have 7 chapters here, we have 6 chapters here, and we have 3 chapters here. Correct? So 7 plus 6 plus 3 is going to be 16 chapters. But I told you that a total of 18 chapters are there for our syllabus. If you look at this, if you look at the syllabus that I have given you, yes, there are 18 chapters covered. Correct? there are 18 chapters covered, but here I have covered only 16 chapters. No, nothing like that. See, here basically there is a chapter called as basic concepts. There is a chapter called as theory. These two alone, I am not classifying it anywhere because these are some generic concepts. These are some generic concepts. So I am just taking these two away. So let me put it here. Let me put it here. So chapter 1, basic concepts, and chapter 18, theory. Chapter 18, theory. These two chapters are apart from whatever has been discussed above. These two chapters are apart from whatever has been classified above. So please have that in your mind. Don't think that some chapters are missing. 16 chapters covered above plus these two chapters, the first and the last chapter. Now, one more thing I want to tell you. This chapter called as basic concepts is not there anywhere in your study material. It's not there anywhere in your CMA Institute study material. Then you might have a doubt, sir, are you doing something that is not there for our syllabus? No, please don't think of this like that. The reason why I have coined this chapter called as basic concepts is because there is a way in which you should learn the subject. So I have taken certain things based on my past experience with students. I have taken it and coined a small chapter, a very small chapter called basic concepts. So this will be a proper launching pad for you to start the subject from the scratch, because I already told you I will start with an assumption that this is the first time you are learning the subject. So a very good way, a time tested approach to learn the subject for the first time is to start it with basic concepts. So don't worry, you will understand everything. I will use plain and simple English. It will be easy for you to understand and appreciate the entire course of lectures. Clear? And this theory chapter, I have just taken it from your institute study note. I have given cross reference. We will be looking at the theoretical viewpoint. The same subject, there are some theories. In cost accounting, there are some theory from an exam point of view. We will discuss it towards the end. So during the course of our lecture, I told you this is a practical paper, which means it requires solving sums and all that. For you to solve sums and understand the subject practically, we will be focusing about that during the course of our lectures, during the initial course of our lectures. And finally, I will also walk you through the theory. Don't worry, the theory will not be omitted. That will also be done. Are you clear with this? Yes. So now let's proceed. On this note, let me just get into chapter number 1 called as basic concepts. So understand, I am classifying the same 18 chapters into 3 buckets. And in this 3 classification, you can find only 16. That is chapter 1 and chapter 18, basic concepts and theory. I have not classified it in any of these 3 because these are some generic topics. So I have just kept it apart from this classification. Clear? On this note, let us get into the first chapter called as basic concepts. Let us get into the first chapter called as basic concepts. So please take out your handbook. Please take out your handbook. And in fact, see, here I have mentioned basic concepts in your study material, CME Institute study note. There is no cross reference because this is not there as such. But please don't omit this chapter. It's very important for you to understand, because during the course of our lectures, when I get into the next chapters and all, I will be linking this with the basic concepts, because in this basic concept, we will be studying the base of our subject on which we will build it slowly. So if the base is not strong, if the foundation is not strong, then the building will not be strong. So have this in your mind. This is where you are going to learn the subject. The beautiful way to introduce you to the subject is by way of basic concepts. So please don't omit this chapter for sure. Okay, so please take this page number 1, that is your basic concepts. Please take your page number 1, which is your basic concepts, and let me just get started to it. Now, the first discussion that I want to tell you before I enter into this chapter, before I enter into the basic concept, is a concept called as cost versus price versus value. Cost versus price versus value. Now, what is this? We will be seeing now. Now, let us take an example. Let us take an example. Now, during your childhood, during our summer vacations and all, if you remember, we all have a fonding, we all have a liking for this, this drink, the color drink called rasna. Yes, in fact, during my childhood, I always love that every summer vacation I take this up as a project. I buy this rasna, pour it, and I think we will make one full bottle of this essence, and then whenever we want, we will mix it with water and we will drink. So that rasna, that is the example that we are going to take right now. And of course, again, I'm telling you, you need not write this down, because anyways, I'll be giving everything to you. So you just patiently listen to the example that I'm giving you. Okay, I'm giving you an example of rasna. Now, let us say there is a company that manufactures this rasna, correct? You have one packet, that box they will give you, that rasna essence and all they will give you, correct? That company is manufacturing rasna. Now, this company, what they are saying is, for them to manufacture this rasna, so look at this from the viewpoint of the manufacturer is a person who manufactures certain things. Okay, look at this from the viewpoint of the manufacturer. Now, for him to manufacture every packet of rasna, let us say he incurs 100 rupees. Let us say he incurs 100 rupees. Now, how are this 100 rupees? Maybe material cost, labor cost, your direct expense, indirect expense, whatever expense that he is incurring, put together from his viewpoint, he says that, sir, for me to manufacture one pack of rasna, it is costing me 100. Clear? Yes. Now, what happens? Now, this 100 rupees that is costing him, will he sell it at 100 rupees? No. He will sell it definitely after keeping a margin. Let us say he sells this at 120 rupees. Let us say he sells this at 120 rupees. Let's say he sells this at 120 rupees. So basically what he does is, he incurs a cost of 100, yes, and then he fixes a selling price of 120 and sells it to you. Clear? Now, what happens, let's say during your childhood, what you say, you tell your mother that you want a pack of rasna. Okay, so she goes to a nearby shop and she purchases this pack of rasna. But when she purchases, what she should pay? She should pay 120 rupees. Yes, correct or not? Yes. Now, and she buys the rasna, prepares the rasna and gives it to you. And you've been longing for this rasna for the last so many months, and now you just drink that rasna, and you feel like, the value that you attach to rasna may be equal to 1,000 rupees. The value, you feel like, I'm even ready to pay 1,000 rupees, I just love this so much. Correct? Yes. So basically what I'm trying to say here is, cost is always looked at from the viewpoint of producer, and price is always looked at from the viewpoint of consumer. Consumer consumer in this case, your mom went to the market and she purchased that pack of rasna. So whenever I use the word price, it is looked at from the viewpoint of customer or the consumer. Cost, it is always looked at from the viewpoint of the producer. And value is generally something that is attached. Value is something that is looked at from the viewpoint of user. It is looked at from the viewpoint of user. In this example, you are the user of the product, that is rasna. Now you can have this doubt, sir, what will happen if I myself go to the market and buy the rasna and I drink? In that case, both the consumer and user will be the same person. As simple as that. Clear? So just to give it very clearly, just to put things very clearly, cost in this example is 100 rupees. Cost is looked at from the viewpoint of producer, how much is incurring. Price 120 rupees, it is looked at from the viewpoint of consumer, how much they are paying. And value is something that, it is very, very subjective. Let's say I drink the same rasna, maybe I might not feel that it's so good. I might even say that I know the value is zero, or maybe I can even give a negative value to this. So there is no concrete base for value and all. So why am I starting with this area? The reason is that generally students tend to confuse between the words cost, price, and value. So cost is always from the viewpoint of the producer. price is always from the viewpoint of the consumer and value is always attached from the viewpoint of the user. And in our subject, the focus is on cost. Always remember that cost, price and value are three different terminologies that cannot be mixed and interused. So cost is always from the viewpoint of the producer, and that is what we will be looking at in this particular subject called as cost accounting. Are you all clear with this? Yes. Now let's move to the next part of this particular chapter. Let's move to the next concept of this particular chapter. What is cost? What is cost? Now you might be having this question, what is cost? Yes, this chapter is called as this subject is called as cost accounting. So what do you mean by cost? First you should know that, right? Now in layman words, we all think that cost means what? An expense. If I spend something, if I spend 100 rupees, that is a cost for me. No, no, cost is not as simple as expense. Now this is where I have defined cost. Now all these things, this is not a bookish definition. I have just put it in a broader sense to enhance your understanding. Now from a theoretical viewpoint, we will see it later. Finally we will see it in chapter 18. Right now I am entering into the subject practically. The reason why I am doing this is because it should not hinder your logical flow and understanding of the subject. That is why it has been sequenced in such a way, and don't worry, it is time tested. It is time tested. Many students have already felt that this way of learning the subject has proved to be very effective. Right now, what is cost? What do you mean by cost? Cost means resources sacrificed for the purpose of carrying on business or profession, which can be quantified into monetary terms. Sir, this definition, bookish definition, we don't understand. Yes, I can hear you saying that. Now broadly, there are three components inside cost. Number one, there has to be a sacrifice of resources. Number two, it should be relating to your business or profession. Number three, it has to be quantified in monetary terms. Now, sir, what it is, please explain. I will give you example. Whenever we are learning a concept, generally, I strongly believe in the logic of giving examples, because the moment I give you an example, you will be able to relate what concept I'm trying to say. Okay, so let's take an example for this. First, let me just take an example. 1 second. Yes, let me just take an example here. Example for first, sacrifice. Now you're saying that, sir, cost involves sacrifice of resources. Now first, generally what we all think, cost means an expense. No, cost doesn't mean expense. It is something beyond that. And a broader word that we are using instead of expense is called sacrifice. Can you give me an example? Yes. Now let us say you have qualified CMA. You are sitting in a campus placement. In a campus placement, typically many companies will come and you are giving interviews. Let us say you have given interviews in two companies and both the companies have selected you. And let's say company one is offering you a salary of 1 lakh per month, and company 2 is offering you a salary of 1.5 lakh per month. I'm just taking an example of campus placement. Correct? Okay. Now company 1 is offering you a salary of 1 lakh per month. Company 2 is offering you a salary of 1.5 lakhs per month. You tell me, other things remaining constant, don't think about the non-monetary aspect of it. Let's say job profile, job work, job environment, security, everything is same in both the companies. Let us assume that. Now, while other things remaining constant, which one of these two companies would you prefer? Obviously, you will say, sir, we prefer company 2. Why? They are paying more. Now, when you decided to go for company 2, without you knowing, you applied the concept of cost benefit analysis. Sir, what is the new thing? Cost benefit analysis. What are you saying? It's straightforward. Wait, I will explain this to you. You have without knowing, you have used a concept called as cost benefit analysis. Let me explain you. Now what happened was, why you didn't choose company 1? Why you didn't choose company 1? If you choose company 1, if you choose company 1, what is the benefit that you will get? What is the benefit that you will get? The benefit you will gain is 1 lakh rupees. Correct? Correct? If you choose company 1, what is the benefit that you will get? 1 lakh rupees. But what is the amount that you will use? You will lose 1.5 lakh rupees. There is another opportunity that I have lost. That opportunity has a value of 1.5. So here in this case, the net benefit is minus 0.5 lakhs, and since the net benefit is a negative, you didn't go for company 1, you preferred company 2. Or in other words, you have done something called as a cost benefit analysis. If you go for company 1, the benefit you will get is 1 lakh rupees salary. But because you have chosen company 1, what do you lose? You lose a 1.5 lakh rupees pay package, which means there is a net benefit of negative 0.5 lakhs. Now you tell me, this 1.5 lakhs, have you paid out of your pocket? Was that an expense that you actually spent? No. This concept is called as opportunity costs. Opportunity cost. This concept is called as opportunity cost, which we'll be studying in a few minutes from now. In this video itself, in this lecture itself, I'll be telling you opportunity cost, but this is all it is. In fact, that's all is opportunity cost. So basically this 1.5 lakhs is not an actual expense that you had to spend. It was an opportunity cost, or in other words, it was a sacrifice you made. So when you are arriving at a decision, here cost does not necessarily mean the actual amount expended or spent. It also includes some sacrifices made by we. That's why we don't use the word expense. We use the word cost involves sacrifice of resources, because sacrifice is a broader terminology. If you actually spend something, that is also a sacrifice. Correct or not? If you spend something, if you spend some money, you're sacrificing your money. Similarly, if you have lost an opportunity, that is also sacrifice. So the word sacrifice is broader as compared to an expense, and that is the reason why the first component of the definition uses the word sacrifice of resources. Are you all clear with this? Yes. Now let's move to the second component that comprises that is a part of the definition of cost, relating to business or profession. Now, sir, if I make a sacrifice, automatically will it be called as a cost? No, it should be relating to your business or profession. Okay, relating to business or profession. Relating to business or profession. Sir, can you give an example? Yes. Let us say there was a company, they donated 1000 rupees to temple. Donation to temple. Okay. So let's say there was a company, they donated 1000 rupees to a temple. Now, can this be called as a cost? No. Why? Because this is not relating to their business. So basically, material costs, labor costs, and all these things that you incur for the purpose of your business activity, that can be treated as cost. Just because you made a sacrifice, this 1000 rupees they paid, let us say 1000 rupees to a temple. Was that a sacrifice? Yes. But just because it is a sacrifice, will I call it a cost? No. Reason, that sacrifice should be relating to your business. Are you clear with this? Any donations made and all, you cannot treat that as your cost. Donation is donation. That's all. It is not a cost. Are you clear with this? So the sacrifice has to be made. That sacrifice should be relating to your business or profession. Are you clear with this? Only then it will be called as a cost. Now there is a third component for inside the cost definition, that is quantifiable in monetary terms. Quantifiable in monetary terms. Now let's take an example here also. So monetary terms, quantifiable in monetary terms. Now let's take an example. Let's say there is an employee, okay, he goes to the company, okay, he's working for a company. He goes to a company and the company pays him a 50,000 rupees salary every month. Okay, he goes to the company and he says, sir, every day I spend 8 hours in office. Every day I spend 8 hours in office. Yes, and I work for your company. correct? For which you are paying me some money. For which you are paying me some money. Absolutely correct, sir. Fine. Thank you so much. 50,000 you are paying. But this 8 hours, actually, I am sacrificing my family time. If I am not working for you, if I am not working for you, I would have spent the time with my family. So I am making a sacrifice. I am making a sacrifice. Correct? Now, please pay me money for that sacrifice also. Now you tell me, how much will the company be able to pay? Can this be quantified in monetary terms? Can this be quantified in monetary terms? Or let's say the person, the employee in this case, is a director of the company. He's the main guy. He's the managing director of the company. And you know, company and managing director, these two people are different. Yes, corporate entity, it is completely different. Correct? Now, this managing director says that, sir, I am sacrificing my personal time, pay me for that. He's spending this time for the purpose of business. I know there is a sacrifice, correct. But can this be quantified in monetary terms? Absolutely not. So there has been a sacrifice relating to business, but since it could not be quantifiable in monetary terms, I will not be able to call this as a cost. Are you clear with this? Yes. So in other words, all the three conditions should be cumulatively satisfied for a particular aspect to be called as cost. Now in this example, MD sacrifices his personal time for business. Yes, so MD sacrifices his personal time for business. Yes, there is a sacrifice relating to business, but since it cannot be quantified in monetary terms, I will not be able to call that as a cost. In other words, your all the three conditions should be cumulatively satisfied for you to call that as a cost. And what are these three conditions? There has to be a sacrifice of resources that needs to be relating to your business or profession, and that could be quantified in monetary terms. So only if all these three conditions are cumulatively satisfied, you can call that as a cost. Are you all clear with this? Yes. And we have seen three different examples for all of that. And the first concept that we saw was cost versus price versus value. That cost versus price versus value, I told you in our subject we'll be dealing with cost, and then I went on to tell you what defines a cost. What are the components that cost should have? Cost should be, there should be a sacrifice of resource that is relating to your business, and that could be quantified in monetary terms. So this is what we have seen till now. Are you all clear with this? Yes. So let's proceed further. Let's proceed further to the main discussion in this particular area. And this discussion is called as cost classification. Cost classification. Cost classification. Now, please take out your handbook. In this, in the page number 1, you have this cost classification that I have given you. There is a cost classification I have given you. I am just reading it out for you. Don't worry. Every single component will be explained in detail, because I strongly believe that more the time you spend on the basics and concept, lesser will be the time you will spend in future. When you're solving sums, it will be very, very easy for you. So please have this habit. More time you spend here, it will be very useful for all of us. Clear? Yes. Now, cost classification for the purpose of stock valuation, profit computation, decision making, control. So I'm saying cost classification, it can be done for the purpose of three objectives, three: A, B and C. It can be done from three angles, and under A, there is again further cost can be classified into expired cost, unexpired cost. A2 is product cost, period cost. A3 is manufacturing, administrative, selling and distribution cost, job cost and unit cost. And under decision making, it can be classified into variable, fixed, semi-variable cost, sunk cost, opportunity cost. And under control, it can be classified into controllable and non-controllable cost. Sir, what is this? You have given so many things, you have given so many aspects, you have just branched it, and you have given so many costs. Sir, cost is a cost. No, sir. Why are you again and again classifying it expired, unexpired, product, period? Here you're saying variable, fixed. Cost is a cost. Why should I classify so many items, so many varieties of classification? Why are you giving all this? Let me explain it from the beginning. Let me explain from the basics. Now, first of all, forget cost classification. What are we seeing right now? Cost classification. You forget cost classification. First you tell me, why do we classify? Why do we classify things? Why at all there is something called as classification? What is classification? Why do we have classification? Classification. Why classification? This is a very important understanding that you need to pay. Again, let me take one example. Let's say you want to travel from India in some airport. You want to travel from Chennai airport. Let's say you want to travel abroad. Let's say you want to go to US. So obviously you will be using an aircraft. So you will have to go to the airport. And once you enter the airport, of course, you're going to an airport to board an aircraft, correct? So let's take an example of airport. Now, in an airport, who travels using an aircraft? So who requires an airport? The airport is built for human beings, correct? All of us are human beings, correct? Yes, generally. Now, yes, of course, I know pets are also allowed at times. That is an exception. I am just telling you in general. Airport is built for human beings. So all human beings only travel. Yes or no? Yes, right. Now, first when you enter into the airport, there will be a counter called as security check. Security check. There will be a counter called as security check. In that security check counter, they will say the entire human beings will be classified into ladies and gents. Ladies and gents. Why? Because the security checking procedure is separate for ladies and separate for gents, correct? Now, once you are done with that, once you cross the security check, of course, ladies, gents, separate queue they will do. And once the security check is over, then everyone will come together. Now, then there will be another place called as immigration. If you are traveling abroad, there will be another place called as immigration. In this place, what they will do, they will check your passport, visa, and all of that will be checked. Now, in this immigration counter, the same human beings will be classified into Indian citizen and foreigners. Indian citizens and foreigner. Here, ladies and gents classification is not required. The same set of human beings are classified as Indian citizens and foreigners. Indian citizen can be a lady or gents. That is not the criteria here. Here in this counter, in the counter of immigration, the same human beings are classified as Indian citizens and foreigners. Correct? So once you've completed your immigration, again, Indian citizens, foreigners, everyone will be together. After this is over, everyone will be together. Now, finally, there is something called as a boarding gate. Boarding gate. In an airport, there is something called as a boarding gate. What is this boarding gate? Here they will be having, this is using this boarding gate only you can enter into the aircraft. Now, in this boarding gate, the crew members of the airlines company, they will be standing there. What they will do is, here they are not bothered about ladies or gents. Here they are also not bothered about Indian citizens or foreigners. Here what they will do is, they will classify the same human beings as business class passengers and economy class passengers. Here what they will do, if you have paid more money and bought a high ticket, that is your business class ticket, they will first give you the preference. You have some perquisites, you have some benefits. They will give you the red carpet welcome and all of that. They will walk you through the seat. You have some privileges. If you are in an economy class passenger, you will not get the top priority. Finally, once all the business class passengers enter, only then you will be given the second priority. Now, in this case, when you are at a boarding gate, who enters the aircraft? The very same human beings only enter the aircraft. But here, ladies and gents is not required. Here, the classification of Indian citizen foreigners is not required. Here, the classification is done based on business class passengers and economy class passenger. Now, sir, why did you take this example? Now, always remember, in all these three examples, in all these three cases, human being is a human being throughout. Correct? Human being is a human being throughout. Human beings are only getting classified, but they are getting classified as ladies and gents or Indian citizens and foreigners or business class and economy class based on the purpose, based on the purpose, based on the purpose based on the purpose that is required to be achieved at each of these different areas. In a security check, what is the purpose? They need to check them whether they are carrying any explosives, bombs and all that. And of course, security check needs to be done separately for ladies and separately for gents. In case of immigration, in it the what is the purpose of an immigration counter? They need to check the passport and other documents, and obviously for Indian citizens the passport documents will be different, for foreigners it will be different. So based on the purpose I want to achieve, I classify the same human beings differently, correct? And here in case of a boarding gate, the purpose I want to achieve is based on the ticket that you hold, based on the money that you have paid, correct? More value ticket, I will give you a different priority and all that. Or in other words, based on the purpose or objective that you want to achieve, I will classify the same set of human beings differently. Now come back to our subject. Similarly, our subject has three purposes or three objectives. What are the three objectives our subject has? Stock valuation and profit computation, decision making, control. So our subject, please carefully listen, our subject has three objectives: stock valuation and profit computation, this is one objective of the subject; decision making, this is one objective of the subject; and control, this is another objective of the subject. Now when you are looking at this subject, when you are using this subject, what is the subject? Cost accounting. When you are using the cost accounting subject for the purpose of stock valuation and profit computation, your same cost, whatever we saw the definition of cost should be looked at from the perspective of A1, A2, A3 and A4. Are you clear with this? When you are using this subject for the purpose of achieving stock valuation and profit computation as an objective, it needs to be looked at from the perspective of A1, A2, A3, A4. What are this A1, A2, A3, A4? I will get into it, don't worry. But you just understand this for the time being. If you want to use cost accounting for the purpose of decision making, it needs to be looked at from the perspective of B1, B2 and B3. And if you want to use this subject cost accounting for the purpose of control, it needs to be looked at from the perspective of C1. So in other words, based on the purpose I want to achieve, the same cost has to be looked at from a different perspective, or it needs to be classified and looked at from a different perspective. Are you all clear with this? Yes. Now understand when you are sitting in a decision making area, you will not use A1, A2, A3, A4. You will only look at cost from the perspective of B1, B2, B3. Correct? When you are sitting in objective A, stock valuation profit computation, it needs to be looked at only from A1, A2, A3, A4 perspective. Now, first, sir, okay. So you are basically trying to say that in our subject, we have broadly three objectives. Yes, our subject is meant for these three objectives: stock valuation, profit computation, decision making and control. These are the three reasons why we are studying the subject. Now theory, in theory, if they ask you, in theory, we will be seeing in chapter 18 towards the end, we will be seeing from a theoretical viewpoint. Now objectives of cost accounting, they would have written some 6-7 points. So broadly these are the three objectives. Apart from that, they would have said determination of selling price and all that. From a theoretical viewpoint, how to approach it, I will tell you differently, but this is how you need to look at the subject practically. So understand, this classification I have made for the purpose of you to understand the subject logically. That's why I have given a note here. The above classification has been done by the faculty for a logical understanding of the subject. The cost classification as per CAS1 is covered in chapter 18 of this book. CAS means cost accounting standard. It has a number, cost accounting standard 1, 2, 3, 4, like that. It has some numbering. And cost accounting standard, I told you what is that. It is a document prescribed by CMA Institute for us to follow certain rules and guidelines in costing. Okay, for the time being, this is sufficient. As per CAS1, there is a cost classification that is different, that is slightly different. That is for the purpose of theoretically understanding. We will also study that. But here, right now, I am walking you through the subject practically, and this is the right way to learn the subject. Clear with this? Now, I have just told you that our subject has three objectives: stock valuation and profit computation, decision making and control. Now our subject, which has three objectives, one second. Yes. So our subject has three objectives. Objectives of our subject. Okay. It has three objectives. I am just using short forms here. Stock valuation and profit computation, decision making and control. Okay. Now our subject has three objectives is what I've told you. Now, sir, stock valuation, profit computation, decision making, control. First, let us talk about stock valuation and profit computation. Sir, stock and profit is computed only in costing. Sir, we have already seen this in accounts, financial accounting. We have already seen it, no, sir. Stock valuation and all that. Let me explain one very important thing that you might not have known before. Now, now, let us say you guys might have seen, obviously, your trading and P&L account. Trading and P&L account. In that, if you see, you have expenses debited to the trading P&L account. You have sales on the credit side, and you have something called as closing stock here. You have something called as closing stock. Now, you just think and tell me, how did you get this figure of closing stock? Or in other words, what was the journal entry you passed to arrive at closing stock? Can you tell me what is the journal entry you passed for closing stock? No, you might not have an answer for this because in your financial accounting stock, there is no journal entry for stock at all. There is no journal entry for stock at all. Let's say you are purchasing something. What will be the entry? Let us say you are purchasing by paying cash. The entry will be purchases account debit to cash. Correct? Yes. Then when you are selling your product by cash, you will get cash account debit to sales. So the purchase, when you are purchasing something, it gets tracked in a purchase ledger. When you are selling something, it gets tracked in a sales ledger. But actually, there is no common ledger that tracks stock. Do you have a stock account? You don't have a stock account. In your final accounts, stock is always given as an adjustment. You will plug it in the credit side of your trading account and in the asset side of your balance sheet, and your balance sheet will successfully tally it. Obviously, in both the liability side and the asset side, if you're increasing, basically if you park it in the trading account credit side, automatically that comes to your reserves and surplus. P&L account comes to the left side of the balance sheet, that increases, and correspondingly asset value also increases. Or basically, in other words, stock never gets valued in financial accounts at all. It is always given as a figure that you are taking. But who gave that figure? Who gave that figure of stock? Only cost accounting will give that figure to financial accounting. Always remember this, guys. Always remember, stock does not get valued in financial accounts. Stock will only be valued in our subject, cost accounting. Now, sir, how do you say this, sir? I will just give you an overview. Further details you will know as we proceed into the subject. Let me just give an example. In your financial accounting, you pass journal entry for purchase of raw material. Example, I'm telling you, when I purchase a raw material, I will pass a journal entry. Correct? Let's say what the entry will be: purchases account debit to cash, or maybe purchase account debit to creditors in case it's a credit purchase. Correct? Now, in cost accounting, what we will do? Now, this raw material that you have purchased, just go to your accounts that you have seen. Raw material you have purchased from a creditor. Correct? Now, this raw material, what you are doing, it needs to be converted into a finished good, for which what you will do, you will put that into a machine. Correct or not? That raw material, it will be put into a machine, processed, and gets converted into an FG. Now, this raw material I am taking, I have already purchased, it is lying in my warehouse. That raw material, I am putting it inside the machine. Will you pass a journal entry for this in your financial accounts? No. But in cost accounts, we will pass a journal entry for that also. We will pass a journal entry even for consumption of raw material. We will pass a journal entry even for consumption of raw material. Or in other words, now in your financial accounting, when you are dealing with an outsider, Only when you're dealing with an outsider, you will pass an entry. Whereas in cost accounts, it's not like that. Even the transaction, every single movement that happens inside the factory, that also gets tracked under cost accounting. So the consumption from my raw material area, if it gets into my factory shop and I start producing it, the moment I put it into my machine, that will also, I will pass a journal entry for that. What journal entry we will pass, that we will see later. But right now, understand the entire journey of conversion of a raw material into a finished goods gets tracked only in our subject called as cost accounting. It does not get tracked in financial accounting, and this is the reason why we are able to value the stock and give it to the financial accountants. Are you all clear with this? Yes. So basically, in financial accounts, you pass entries for purchase of raw material. You pass entries for consumption of raw material. Let's say here you pass journal entry for payment of power bill. Payment of power bill, EB, electricity board is there, to which you need to pay some power bill. Here I will pass entries even for consumption of power bills, even for consumption of power. So as and when I consume power, let's say I'm switching on my machinery for 1 hour. For this 1 hour, right now itself, I will see, okay, so much is the power that has been consumed. So that is the cost that needs to enter into the product. So the product, let's say I'm a pen manufacturer. Finally, the moment it comes out of the machine as a finished goods, I will know what is the amount of material sitting inside it. That is how much amount of plastic has gone inside it, how much labor, how much direct expense, how much indirect expense. All of this I will be able to readily track it, and that is the reason why I am able to value every unit of stock only in cost accounting. This does not get tracked under financial accounting. Are you clear with this? Yes. So always have this mind, stock gets valued only in cost accounting, and in your financial accounting, they borrow the figure from us. So we give this figure, we give as cost accountants, we will value the stock and give the stock value to the financial accountant only based on this. Only based on this. Only if you value the stock will you be able to arrive at the profit. Correct? If stock is not there, you cannot arrive at the profit. Hence, stock gets valued, and after stock gets valued, you will be able to arrive at your profit. And that is the reason why the first objective of our subject is called as stock valuation and profit computation, because stock gets valued in our subject, based on which only the financial accountants themselves can prepare the P&L account and arrive at the profit figure. So the first objective of our subject is called as stock valuation and profit computation. Are you clear with this? Are you clear with this? Yes. Now, what is the second objective of our subject? That is called as decision making, and the third objective of our subject is called as control. Now I'll just give you a small example for control. Now in case of control, an example is what happens targets will be set for employees. Let's say a company is there, a lot of people are working, they will set some targets. Who will set? The top management. They will set some targets. Targets basically is a budget. Okay, they will say in this year you should produce so many units, let's say 1000 units, 2000 units. Like this, they will set the targets, and once they set, this is what they should do. That is, let us say there is a production manager. Now the top managing director will tell the production manager, this year you need to produce 1000 units. This is called a target. And he will start working. Targets are set at the beginning of a particular period. Then this manager, he will start working, the production guy will start working. At the end of the period, his actual production need not be exactly equal to 1000. It might be more or it might be less. So what the managing director will do is, he will compare the target with the actual performance, and then he will punish or reward the people accordingly. Are you clear? This is called as control. The top management, how do they exercise control on the staff, on the people working in the company? They will set targets and then compare with actual performance. with actual performance, and this process is called as control. We will see this in detail in later course of this of our lectures, in chapters like budgeting, in a chapter called standard costing and all. We will see that later, but I just want you to get an overview as to what this is going to tell you, as to what this area is going to tell you. So we are going to set targets, and those targets will be compared with actuals, and based on that the people will be rewarded or punished. If they are overperformed, if they are properly performed, they will be rewarded. If they have underperformed, they will be punished, and things like that will happen. Now let's move to the second objective of our subject, which is called as decision making. Sir, what is decision making? I'll just give you again a broad example, because in detail we will be seeing it in the later course of our lectures. Now, decision making, for example, I am just coming down and giving this example. Okay, so decision making. Let us say the top management of the company, they are vested with two alternatives. They have two alternative proposals are given to the top management. Alternative number 1, alternative number 2. Alternative number 1, what they are saying, now one group of people are saying, they are taking to the board, they are telling to the top board of directors of the company, you fix the selling price of your product as 10 rupees. And another set of people are telling the board of directors, you fix your selling price as 12 rupees. Now, we all know that when you fix your selling price lesser, you will be able to sell more, because your product is relatively cheaper. More people will come and buy. Correct? If you are fixing your selling price slightly less, then the demand for your product will be lesser. Correct? If more the price, lesser the volume, lesser the demand. Now let's say another fact is also given. If I fix the price at 10 rupees per unit, I will be able to sell 10,000 units. And if I fix the selling price at 12 rupees per unit, let us say I will be able to sell only 8,000 units. Now these are multiple alternatives. Which alternative is better? Now wait, we cannot come at a conclusion just like that, because both the alternative has one advantage and one disadvantage. In alternative 1, what is the advantage? You will be able to sell more units. In alternative 2, what is the advantage? Each in every unit you sell, you will be able to get more rupees, that is 2 rupees extra you will get. Correct? So what the company will do is, based on other aspects also, the cost aspects will also be given. Based on that, they will arrive at the profit. Under alternative 1, under alternative 2, and they will go for that alternative that gives them the maximum profit. Now in this example, I just gave you two alternatives, but in real life scenario, you might be having more than two alternatives. Let's say they have 10 alternatives. Out of the 10 alternatives, which is the best alternative to be picked by the board is called as decision making. How do they do that, and what we will be studying during the course of our lectures? But I'm telling you, I'm just giving you an overview as to what this decision making could look like, choosing between multiple alternatives. So day in and day out, managements will be posted with a lot of decision making element, and our subject will help the management in taking decision making also. Are you all clear with this? So broadly, our subject has three objectives. Stock valuation, profit computation. I told you stock is valued under cost accounting, not under financial accounting. Number 2, decision making. What is decision making? Choosing between multiple alternatives in a very, very broader sense and in a layman language, choosing between multiple alternatives. And control is setting targets and comparing the actuals with the targets that are set, and based on which, if they have overperformed, you can actually reward them. If they have underperformed, they need to be penalized. Are you clear with this? So these are the three objectives of our subject broadly. And for each of these three objectives that we have, cost should be looked at differently. That is why I told you, based on a given purpose, the same cost can be classified differently that is what we are going to see as cost classification. So in cost classification, I told you this A1, A2, A3, A4. The same cost gets classified in so many ways, A1, A2, A3, A4, for the purpose of stock valuation and profit computation. For decision making objective, the same cost should be looked at from the perspective of B1, B2 and B3. And for the purpose of control, cost should be looked at from the perspective of C1. What are all these things? A1, A2, A3, A4, B1, B2 and all. What are these things? We will see it in the next lecture. So right now we have come to the end of this lecture. So to just sum up whatever we have done in this particular lecture, number one, I classified our entire syllabus broadly, and I just told you that our syllabus can be looked at from a different perspective, and we have classified this as elements of cost and cost bookkeeping, methods of costing, techniques of costing. I told you apart from that, basic concepts is a chapter that I am keeping in our handbook. This is not there in your study material. However, this is a launching pad for you to learn the subject, and this theory we will be doing it towards the end. And in basic concepts, we started off with a concept of cost versus price versus value, wherein I gave a Rasna example to explain everything. And I told you in our subject we are more concerned about cost, because the name of the subject itself is called as cost accounting. Then what do you mean by a cost? I told you cost should have three aspects: sacrifice of resources for the purpose of business or profession, and that can be quantifiable in monetary terms, and we saw examples for each of that. And then cost classification. Before we entered into cost classification, I told you why do we have a classification purpose. We took that airport example, and we all learned that classification is done based on the purpose I want to achieve. Correct? That was the learning point. So accordingly, our subject has three purposes or three objectives. What are the three objectives? Stock valuation, profit computation, decision making and control. And stock valuation and profit computation, stock gets valued only under cost accounting, not under financial accounting, and only if you value the stock you will be able to arrive at the profit figure. So, and hence the first objective was called as stock valuation, profit computation. Decision making is nothing but choosing between multiple alternatives, and when it comes to control, it is nothing more than setting targets, comparing the actuals with targets, and rewarding or penalizing your employees based on that. Are you all clear with this? So please revise this lecture. So I will meet you in the next lecture. Thank you guys. Thank you so much.